Hello friends, I hope you're doing well. Today we'll be discussing 10 points to tally your single entry system. This is for CA Inter Students Group 1 Paper 1. Okay, let's begin. Now the first one, definitely, we will be starting our answer by preparing your trial balance, your P&L and closing balance sheet. Okay, this will be your main answer definitely. So how do we start? You will write with in the books of, okay, and you write the financial year and then you write trading account, P&L account and balance sheet. Now your trading account will start with opening stock, then you will write purchases, you will write sales, you will write closing stock, and this will be your GP, that is the balancing figure. Of course, if there is wages, carriage, inwards, so that will come here in your trading account. Now, this is your trading account. Now, after this, we will prepare our P&L. So I will bring down my GP, add my indirect incomes, write my indirect expenses, and I should arrive at your net profit. Okay, then you will prepare your balance sheet. This will be your closing balance sheet at the year end. Here will be capital, under which you will have opening capital, which will come from your opening balance sheet, which will be your adjustment number 1. Then you will add additional capital. You will minus drawings, add your net profit to arrive at closing capital, which will go to the outer column. And then you will write your closing liabilities. Here you will write your closing assets, your fixed, current, all the assets, and your balance sheet will tally. Now, discussing one by one, openings. Now, I'll just discuss the main ones. Now, your sales. Question remaining silent. If the sale is given, then always assume it is credit sales. Cash sales will be 0. Okay. Now, if the sales figure is not given, then the second way to arrive at it is from debtors account. Okay, we'll discuss that in a few points. Debtors account you will prepare and you will find the credit sales. If from debtors account also you're not able to find, then use the third method, that is your COGS. COGS has 2 formulas. First one will be your sales minus GP percentage, you will arrive at COGS, or opening stock plus purchases minus closing stock. So you arrive at COGS and then you will do the backward calculation. Okay. If the question has told that credit sales equals 80% of total sales, then what does this mean? You have to do this. Very simple. Cash sales plus credit sales is equal to total sales. We all know this, correct? Now, they have given the credit sales. This will be 80% of the total sales. So total sales will be 100% and cash sales will be 20%. So accordingly, you will do a cross multiplication and find the other sales. And this will go to your cash in bank, second effect. This will go to your debtors account, second effect. And total sales will not go anywhere. This will come to your trading account. Clear till here? Now, same with the purchases. Question remaining silent. There are no cash purchases. It will always be credit purchases. Apart from that, no other item to go deep discussion. I've already discussed capital. That will be your point number 1. So I'm just summarizing. Point number 1 says you have to prepare trading P&L and balance sheet closing, which will be your main answer. So this has to be presented very neatly. Okay. Coming to the second pointer. Now, how to go about with the question? The question will give you either opening balance sheet or it will give you some line items, or it will give you trial balance, or some items it will give you. Okay, so what you have to do is open all ledgers together. Okay, so I open trading, P&L, and balance sheet, which we have already discussed in point number 1. That will be your closing balance sheet. This is your main answer. Now, if in the question they have given opening capital, then great. But if they have not given opening capital, then your first adjustment will be balance sheet, which will be opening balance sheet. And this balancing figure will be your opening capital, which will help you in the closing capital. Okay, then other adjustments, that will be debtors, creditors, your bills receivable, your bills payable, then your expenses account, or your cash and bank. So all these ledgers you have to see. You have to see each question, what are the items involved, and accordingly it's not necessary that you have to open all. But if there are no bills payable, then you will not prepare bills payable account. Or if there's no outstanding and prepaid expense, then you will not prepare expenses account. Correct? So what do? Decide which ledgers do we need at the start of the question. Just go through and decide at the start of the question which ledgers do we need, and open all ledgers together. See, we have to understand, for your trading account, you will need about 5 to 6 lines. For your P&L, maybe about 10 to 12 lines in each question on an average. And your closing balance sheet, you need more than half a page. Okay, so that much you should leave, and open all the ledgers together, and keep double posting. So that is my third point. Very, very important. Every item will have 2 effects. Every item will have 2 effects. Every item you give 2 effects, definitely your closing balance sheet will tally. If you do not give 2 effects together, so students, what do? In rush push, they forget to give another effect. Gone. Single entry won't tally. So you have to give 2 effects for every transaction. Okay. Now let's go to the next one. Your fixed asset adjustment. Now I will help you teach. I will teach you how to prepare a fixed asset account. Okay, fixed asset is an asset, therefore it will have debit balance. So your opening balance will come here. I'll just write short form. And your closing balances will come here. Okay, if you make further purchase, then it will come here. Okay, and you will write to cash and bank. Correct? If you make sale, it will come here, so decrease. If you have depreciation, it will come here. Okay, now fixed asset opening balance and closing balance is given. So opening balance sheet will give you opening balance, and closing balance supposedly they have given. If it is a trial balance given, or opening and closing balances are given, supposedly they have given. So you will put second effect to opening balance sheet, and closing effect to second effect to closing balance sheet. Now, but if in the adjustment they have told, or let me write, if question states that depreciation is to be provided at whatever percentage, then this closing balance does not include depreciation. So according calculations have to be made. Okay, the question states that depreciation is to be provided, or then what you will do, can I say this closing balance does not include depreciation, and accordingly calculations have to be made. If the question says depreciation is provided, then the closing balance includes the depreciation, and then the closing balance is arrived. So this balance can directly be taken to the closing balance sheet. Clear till here? Okay. Now coming to the other part. Sale of fixed asset. If there is a sale of fixed asset, then what to do? Whenever there is a sale of fixed asset, you have to remember that you have to account for 3 items. Okay, mandatory. First, sale, that is money received, cash and bank. Okay. Second, depreciation, that is up to or Let me be more specific. Year start to date of sale. Third, now mind you, this depreciation is on the sold asset, not on all assets. Okay. And last one, profit or loss on sale. Okay. Now, these three items will be credited to fixed asset account. Okay. Obviously, if it is profit, then we will debit to fixed asset account. Clear? So whenever there is sale, you have to account for three items. First will be your money received, that is cash in bank. Second, depreciation from the year start to date of sale on the asset sold. And third, profit or loss on sale. Now, these three should be for one. Obviously, there has to be two effects. So first effect is credit to fixed asset account. Second effect. Now, second effect, obviously, this will go to cash and bank. This will go to P&L, debit, and profit or loss. Profit will be credited to P&L and loss will be debited to P&L. Clear till here? So this is your fifth important point. Whenever there is a sale of fixed asset, you have to account for three things. Okay. Now after this, after the sale, when you provide for depreciation, you have to remember that there will be only remaining asset. If there was 1 lakh at the year start and 20,000 worth asset is sold, then the remaining will be only 80,000, on which you will give depreciation at whatever rate they have given for the full year, because this remains from year start to year end. Okay, not like this year start to date of sale. This will be always full year. Okay. Now next point number 6. Now the important one. Okay, debtors account. How to make a debtors account? Now, in a debtors account, there has to be mandatory 4 things. Okay, so the first one is balance brought down. Second one is balance carried down. Third one is credit sales. And the last one is cash in bank. Okay, now opening balance is the opening balance of debtors. Credit sales is sales made during the year, which will increase the balance of the debtors. Cash and bank is money received from the debtors during the year. And last one is your balance carried down. Now, without these 4 items, we will not close debtors account. You have to have the 4 items, only then we will close the debtors account. Clear? So if you have 3, the 4th one will become the balancing figure. Now, apart from these, there can be other items in the debtors account like bad debts, sales return, discount allowed. So whatever other items will be there that you will know. Now, along with debtors account, there is another account called bills receivable account. Okay. Now, bills receivable account, again the same. You will have balance brought down, balance carried down. Then you will have 2 debtors account, that is your bills receivable drawn during the year. Okay. Then you will have by cash and bank. This is your bills honored during the year. If there's bills dishonored, then it will be by debtors account. Okay. Now, so whenever there is debtors account and bills receivable account, make sure that you open both of them near each other. Okay. Now, whenever there is bills receivable and debtors account, you have to always first close bills receivable account and then close debtors account, because sometimes what may happen, you will have opening balance, you will have closing balance, you will know what is the bills honored during the year or dishonored during the year, whatever, and the balancing figure will be your debtors account, which from here will come here. Okay, so if you do the debtors account first, then you will go wrong. Okay, so always make sure that you first tally your bills receivable account and then we tally our debtors account. Okay, now a very important entry, whenever a bill is endorsed, the journal entry is debtors to creditors. Whenever whenever a bill endorsed is dishonored. Whenever a bill endorsed is dishonored, that time the journal entry is debtors to creditors. So it will not affect the bills account anywhere. A lot of students get confused, ma'am, bills account should be debited or credited. It will not affect the bills account. It will, the journal entry will be debtors to creditors. Now, to understand this detailed explanation, I have made another video on bills of exchange. Please refer that video. Now, coming back to debtors account, if there is given provision for doubtful debt percentage, okay, as an adjustment, then can I say we have to give two effects for this? So this PDD will be given on this, the closing balance. So what you will go, you'll go to closing balance sheet. You will write debtors here, right? So debtors minus PDD, and then you will put to outer column, okay? And this PDD second effect will go to P&L debit side. Clear till here? So just summarizing, debtors account, mandatory 4 things: opening balance, credit sales, cash in bank, and closing balance sheet. So if you have 3, the 4th one will be the balancing figure. Coming to bills receivable account, opening balance, debtors, cash bank, and balance carried down. 3rd one, 4th one will be balancing figure. Now, what did I say? Whenever you have debtors and bills receivable account, what will we do? First, we will close bills receivable account. Balancing figure may either go to debtors account, or if that is given, then it will be balance carried on, whatever. Okay. And then we will close the debtors account to find the 4th figure, what is not there. Okay. Then the second thing I said was, whenever bill endorsed is dishonored, the journal entry is debtors to creditors. It is not affecting bills account anywhere. Okay. And if there is a PDD percentage given, then what you will do, you will not put it in debtors account. The closing balance, when you put it to balance sheet, you will minus the PDD from there, and the second effect of PDD will be P&L debit side. Sure. Now let's go to the point number 7. That will be your creditors account. So creditors account again will be the opposite of debtors account. So you will have buy balance brought down, to balance carried down. You will have credit purchases, and you will have cash bank. Okay, again, these are the 4 important things. Yes, there will be other items like discount received, purchase returns. Yes, all those items are there, but these 4 are main. Without these 4 items, you cannot close the creditors account. If you have 3, the 4th one will be the balancing figure. Okay, and coming to bills payable account. Okay, you will have balance brought down, then you will have balance carried down. Okay, then you will have here, you will have creditors. This is your bills accepted during the year. Okay, and then you will have cash bank. Again, the same rules apply. If you are preparing creditors and bills payable, first close bills payable account and then close creditors account. Chalo. Now let's go to the 8th one. That is your expenses account. Okay. Now, expenses account, you will only prepare if you have opening and closing outstanding, or opening and closing prepaid they have given. Only in that case, you will prepare expenses account. So expenses account, how do you prepare? Okay. Now, opening outstanding means opening payable. Therefore, it is a liability. Therefore, it will be credited. So opening outstanding will come here. Therefore, closing outstanding will come here. The opening out prepaid, asset paid in advance, and closing prepaid will come here. Okay. Then during the year, you will pay some expense in cash. So cash bank will decrease. So cash bank will be credited. Therefore, expenses account will be debited. It will come here, and this will be amount which should go to P&L, which will be your balancing figure. See, normally whenever an expense is given, you directly put it to P&L and cash bank. But when opening and closing outstanding and prepaid is given, in that case we open the expense account. Cash bank will go to cash bank itself, and this P&L figure will not be the same. It will be different because you have to consider opening and closing. Okay, so this P&L will be balancing figure. Now if the expense, if the statement of the expense says expenses paid during the year, therefore this means this is cash bank. If the question says expenses of the year, this means they have given P&L figure, and this time cash bank will be your balancing figure. Okay, now last one in expenses, difficult adjustment what may arise is if they say insurance premium paid same every year. Every year. So what does this mean? Every year you're paying 12,000 on 1st of August. Okay, so can I say you are paying for April, May, June, 3 months of the next period in the current year? Correct. See, if you see your accounting year, it is from April to March. Okay, so you have May, June, July, August, September, October, November, December, Jan, Feb, and March. So every year, 1st of August, you are paying 12 months premium. Okay, but it is 1, 2, 3, August, 1, 2, 3, 4, 5, 6, 7, and 8. September, August, September, October, November, December, Jan, Feb, and March. 8 months you're paying for the current year, and the next year, April, May, June. That is your 3 months in the next year. Correct, everybody? So what here happens is for the next period, that is your April, May, June, and July also, that is your 4 months, you are paying prepaid. So this happens same every year. Therefore, if your opening prepaid is 4,000, then your closing prepaid will also be 4,000. You need not calculate. Okay, so here the easier was the example because it was 12,000, 12 months, so it became very easy. But in the exam you don't have to calculate. If they say that insurance premium paid is same every year, then what you will do, you will do opening, whatever is the opening prepaid, same you will take as closing prepaid. Lot of students, they forget that there will be closing prepaid and they do not take, then the entire calculation will go wrong. So you have to be very careful. If they say that insurance premium paid is same every year, then this means opening prepaid is equal to closing prepaid. Clear till here? Chalo, let's go to next one. Point number 9. Now, if they say that the cashier absconded with the balance remaining cash at the year end, means he ran away whatever was available cash in the business at the year end, he ran away with that. Then what does this mean? When you prepare your cash account, you will have balance brought down, you will write all the receipts, you will write the payment. There will not be any balance carried down. There will not be any balance carried down. Whatever is the closing balance will be charged to P&L. Okay, normally yes, we charge it to P&L assuming it is not receivable, but if the question says it is receivable, then you show it as an asset in the balance sheet, receivable. Okay, so if the cashier absconded with the balance cash, then we charge it to P&L, that is your debit side. Okay, and if this question states that you gave away goods distributed as free samples worth rupees 10,000. This is your cost price. Okay, then this means that goods have gone out of the business for free. Therefore, the two effects of this will be, one, definitely this is for advertisement purpose. Therefore, it will go to P&L, debit balance, and debit side you will write advertisement. Okay, And the second effect of this will be you will minus from purchases in your trial balance, that the cost price of 10,000 you will minus at balance sheet at 10,000 from the purchases. Okay. And the last point, point number 10. If you have a loan or an investment given to you in the question, and they have also given the percentage, okay, then you have to make sure that you always calculate interest on loan, that is payable expense, and interest on investment, that will be your income. So this will be your income and here it will be your expense. If the percentage is given, always you have to calculate the interest. Now obviously the interest calculation for investment will be fair value of the investment into percentage into months divided by 12. Normally if the investment is opening closing balance is the same, then 12 by 12. But if the investment is purchased during the year, then accordingly month calculation you have to do. And again for loan, it will be loan amount into percentage into months divided by 12. Same calculation for months. So I hope this helps you. I hope you're able to tally your single interest system. If you have any doubts, please mention me on the comments and I'll definitely reply. All the very best, guys. Study well. Take care. Bye bye.